so tired of micromanaging. How do I train, manage, and lead? I can't find time to be visionary. Head down in the weeds.
All right, gang. Yep, I'm having another conversation called Know Your Frickin' Numbers. And I'm so excited about today's episode and to have a very special guest here, Ryan Kimler. So excited to have you here. Thank you for your time today.
Absolutely. I'm excited to have this conversation. I love educating business owners on the numbers and the numbers that they should know. There's so many things wrong with the current system that we have in America and how business owners work with accountants. And so I love to have these conversations. I love to take the time, and thank you for having me.
Yeah, absolutely. Give our listeners a little bit of your backstory.
Sure. Yeah. So I have my accounting degree. I have my finance degree. When I got out of school, I have my 150 hours to sit for the CPA. And so, what do all accountants do when you have your hours? You go work for a CPA firm, right?
Yep.
And you get ready, you learn that experience, and get ready to sit for the CPA. And that was fully my plan. And the CPA firm that I went to was working with small business owners on their accounting and um, really doing all the compliance pieces of it, right? Bookkeeping, general ledger accounting, getting clients ready to file taxes, filing the taxes, making sure they're compliant with the IRS, all of the I call boring accounting stuff, right? I mean, we produced financials for our clients, profit and loss, balance sheet, things like that. And, along the way, I had a couple clients ask me or kind of say to me, I'm going to paraphrase, Ryan, we really appreciate the work that you do. And, we're thankful that you produce financial reports for us, and they're always done on time. And what would be really great would be if you could give us some advice on how to make our numbers better, how to improve our business. And at the time, I was very green, right? First real, job, first real career out of school, had no idea to the answers to those questions. And um, the accounting firm that I was at was definitely not the right environment to take on that kind of thinking. And so ended up leaving there, waiting out my non-compete. I went to a big corporate firm that was an oil company, $100 million plus. And so I kind of saw the corporate side of things while I was waiting out my non-compete. Got some good experience there, kind of saw how corporate finance really worked. Also found a few mentors along the way. I still wanted to get back to working with small business owners and improving their finances, and found a great small business CFO training organization in 2021. I had already launched my own accounting firm in 2019. And then by summer, so I found the CFO organization summer of 21. It was like July. By June of 22, I unwound my accounting practice and I was working fully on the CFO advisory side of the business, working with business owners, improving their numbers, improving their profits, and found that it was really work that I loved, wanted to be in. And, I guess as they say, the rest is history. I mean, that's what I do today. Love what I do. And that's all my firm does, full time, is we work in the advisory side of the business, really focused on the numbers, focused on the accounting, and improving businesses.
I love that. Message number one for many of our attorney listeners and or team members that are legal leaders, the courage it takes when you're like, this isn't working for us to do payroll, bookkeeping, taxes, if you were doing that, what have you. When you are looking at your numbers, you're like, it's not a profit center. It's sucking the life out of me. And where my passion lies is within the advisory and really supporting and seeing the light bulb go off for businesses and seeing them grow their business by 25% plus in 90 days, which I know you've done over and over again. And so kudos to you, because it's very difficult so often when people, whether it's shutting down a practice area that doesn't serve them anymore and or streamlining their system and stop giving people access to the bat phone, if you will, unlimited and things of that nature. So I love that. So I know today we're going to, Last question. Why legal? Why law firms?
Yeah, so the first firm that I was at, we worked with a lot of law firms. That was probably, 80-90% of our clientele. So I really learned the space. And we were also remote and we worked nationwide. So I learned like not only the space and the different practice areas, but also like, different states, right?
Yeah.
And really I mean I love working with lawyers, right? And I found that at that firm, I wasn't doing the right kind of work with them. But I love working with lawyers. And so when I launched my firm, I still had the same focus and really just stuck with it. And I think they are great people to work with. Not everybody agrees with me on that, but I think they are. And unfortunately, I think they don't learn enough about running a business in law school. And so, they're not given the right resources and tools. And I love to help them with that.
I love it you say that because I love to work with lawyers as well. Same thing. They are not trained how to manage, how to lead people, process, production, profitability, which is so ironic to me because, you look at TV or what you hear when you grow up, be a doctor or a lawyer because they're
Hmm.
rolling in the dough and making money. And then you hear that, lawyers are, snake oil salesmen, all they care about the money, and you're like, if you only knew those reports that Ryan says to them, they get crippling anxiety before they even open it up because they're deathly afraid. They're expecting the worst case scenario. And
Yep.
so small business owners, when it comes to that, and attorneys by and large, and that's what I love. When my first experience working with attorneys back 20 plus years ago, where I'm like, everything that society and TV has told us about lawyers could not be further from the truth
For
at
sure.
all. Could not be. They are a business owner, and they spend a tremendous amount of time, money, heartache, headaches, and resources in law school, which is no small feat. And then they
Yep.
walk out, and they are completely like a nomad. There's no resources. And what I love about what you do, what I do, is that there are people that are passionate about law firms, passionate about the legal space, and they could hire an advisor like you, not have someone full-time on staff, but I think a lot of times, or outsource their recruiting or their training for their admin team. I love that there are so many resources that take into consideration the budget.
Yep.
None of my law firms that I know of can put a full-time recruiter for, $200,000 a year on staff. So,
Yep.
let's dive into really, let me ask you one quick question. So when you were working with other firms, I hear all the time from attorneys, well, we're not that big. We're small. So blah, 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 fill in the blank, whatever question you ask, can you send me your numbers if you know them? Well, my wife does my bookkeeping. We don't really, we're not that big to have to worry about that right now. Have you worked with big firm and small boutique, solo practitioners, whatever it might be? And is there any difference in regards to what they need to know to be able to grow and scale? Because if you're small, if you keep saying you're small, and I always say this to people, stop saying you're small. What's your
Yeah.
definition of a small law firm? I'm like, you're generating $2 million a year with 1.5 attorneys, and you have basically an entire virtual staff over in the Philippines and one client service coordinator, and your profit margin is clipping above 47%. How is that small?
That's not. That's not. Yeah, I mean, you know, I think what's really important, and again, this kind of goes back to just running a business and knowing, the positions in the finance department, one of those being, a bookkeeper, right? I tell attorneys and law firms, if you're doing more than $150,000 in revenue, you can afford a bookkeeper. There are bookkeeping firms that operate virtually. We have the technology to leverage and do that today. And there are firms that specialize in working with law firms. There's plenty of them, right? And they can start working with you when you're $150,000 in revenue. And even if you're doing the work yourself, right, it's not worth your time,
No.
right? Because instead you could be out generating more business, getting more clients, and, investing, you know, $300, $400, $500, $600, $700 in a bookkeeping firm to pay them that monthly to handle your books and get your numbers right and let them be the experts in it. Way, way, way worth it, and definitely affordable. I mean, $600 a month times 12 months is what, $7,200,
Right.
right? Out of your 150. I
And
mean,
what's your average case value, right? So
yeah,
I'm all about gamification. So if you're going
for
to sell
sure.
out that $700, what's your average case value? The 359 hours that you're spending on bookkeeping where you want to put your head through a wood chipper because it's not your unique ability, it's not your strength, it sucks
Yep.
the life out of you. Well, free it up and go do one more consultation and close, and you'll not only have the money to pay for them and then some. So I
Yep.
love that. What let's dive into the 10 numbers.
Sure.
I'm
Sure.
excited for this.
So the first top two are definitely vanity metrics, right? And they plug into revenue, right? That all business owners love to hear about, right? So as a law firm, if you look at your total number of invoices or that you're issuing, right? So if you're I'm just going to throw out, if you're, an estate planning attorney, you probably issue one invoice per estate plan, right? That would be that number of invoices versus if you're a family law attorney and maybe you're dealing with divorces, you probably have monthly bills that maybe one case is 4 or 5 invoices, right? I would count that as 4 or 5. So
Okay.
total number of invoices is really our volume of the firm, right? And then the other number to look at is what is the average price, like what you talked about, what, not just average case value, but what's our average invoice value? So if you take those two numbers and we multiply together, you have volume and what's your price, that's going to get you to your revenue. And the only way to grow revenue is grow one of those two numbers. You're either issuing more invoices or you're increasing your average price. That's it. Those are the two ways to make revenue go up. So those two numbers, knowing those two numbers, right, really helps you know the velocity of your firm. Super, super important.
I
Anything
love
you want?
that because one thing that I've always heard, average case value, life cycle of a file, life cycle of a matter. And what you're saying is look at the number of invoices and
Yep.
then to look at it different from an invoice value versus the average case value. Can you say a little
Yep.
bit more about the line of delineation there?
Yeah. So, you might bring in, again, I'm just going to, pick family law, pick divorce cases. A divorce case, you might be 10 to 15K. I'm just throwing out numbers.
Yeah, that's about right. Yep.
So if you're looking at average, case value and you're looking at, lifetime value of a customer and all those kind of things, that doesn't help you get down to, well, if I sign up a new divorce case today, what am I earning monthly on that and for how long? Versus when you look at what's my average invoice that I'm issuing on a monthly basis, right? So because usually law firms bill monthly, right? So when we're looking at invoice volume or we're looking at what's your average invoice worth, that helps us get down to what are we generating on a monthly basis, right?
Yes.
And so that's why I love breaking it down that way, because you might sign a divorce case today for $15,000 and you might collect that retainer and it might be sitting in trust, but that does not mean you have it to spend today
No.
and you're not going to have it to spend in the next month. You're maybe going to have 3 to 5K of that to spend in the next month. And so that's why I break things down by number of invoices, average invoice value.
I love that. So for my transactional law firms, don't brown out here because I love the way you're breaking this down. Estate planning. Let's go back to your first analogy. Yeah. Average case value is $5,000, right? Most firms, I have some that collect all up front, but
Yep.
to your point, you did not earn $5,000. It's going into the trust account, and or I have other people who do 2 payments at
Yep.
engagement and then delivery, binder
Yep.
delivery, what have you. Well, here's the deal. What I love about this, because when you look at it, so many people getting into process, they will collect the money, get retained, throw it in their trust account, and they've earned their first half of the fee, but the second half of the fee, they have no process, no production. So they're like, yay, we got hired, and it could be 2 months or 3 months before. Whoever holds the narrative wins is what I always
Yep.
train, and people behave how you train them. So the second they engage you, you schedule them immediately, ideally within 30 days, to come in for their final piece of the process and sign their documents and what have you. So
Yep.
I will hear so often from people that will say, we generated, $100,000 this month. I'm like, no, you didn't, because you break your payments in 3 payments, or you break them
Yep.
into 2. Even if it's all up front or what have you, you have not earned that yet, because there's a ton of stuff that has to happen before you can move a penny out of that trust account.
For sure. For
Yeah,
sure.
I love that. Okay, next, number 3.
Yes. 3, 4, and 5 are all expense numbers and go together. So I break expenses down into 3 categories. I look at payroll, marketing, and overhead. And I break those down not only in dollars, but you also need to look at them as a percentage of revenue. So we have, obviously, you can get down to, from our total invoices issued and our average invoice value, you can get down to what's my monthly revenue, right? And then on the expense side, if we have monthly revenue of $100,000, meaning we're a $1.2 million firm, and let's say our payroll is $40,000, we know our payroll is not only $40,000, it's also 40% of our revenue, right? So know it in dollars and percentages, right?
Oh, I love that.
Because your revenue is going to be 100% of what you bring in, right? If our payroll is 40%, we know that what's left to pay bills is 60%, right? So that's got to cover our marketing and our overhead. If marketing is 10%, now we're down to 50% left of our revenue. If overhead is 25, overhead is going to be all of your insurances, basically what it takes to run a brick and mortar. Insurance, rent, softwares, computers, equipment, right? That is going to be your overhead number. If that's 25%, right, that would leave you with 25% profits, right? So if you're 40, 10, 25, that leaves you with 25% profits.
And so can I ask you a question? This is what I get all the time. Let's
Yep.
talk about marketing. I'm
Yep.
paying for a marketing coordinator or CMO. Where do they go? In payroll or marketing?
I would say that's in marketing.
It's in marketing. There's
Yep.
salaries in marketing
Yep.
is where you put it. Okay, great. And then here's a question, and not to put you on the spot, you get to punt it, but what do you recommend for a marketing spend for a firm that wants to grow this? I've heard 13%, I've heard 33%, I've heard it all over the board.
Yeah, definitely depends on the space, right? Because obviously, like,
PI.
like PI is way different compared to like estate planning,
Estate planning,
right?
yeah.
Or some other sort of flat rate or hourly service. If we're talking the flat rate and hourly service teams, I think somewhere between 10 and 15%,
Okay.
can be a good place to invest and really grow a firm. It also depends on the firm's size, right? I would say, that 10 to 15% number, I'm working with law firms that are typically between like $1 and $10 million a year, right? And when you get into the bigger end of things, right? If you have a $5 million law firm, spending $500,000 a year in marketing could be a lot of money. And so, that 10 to 15%, is like, yes, it's a blanket statement number. I would still caution and say it depends on the situation. But for most of the firms that I work with, I would say that 10 to 15% target is, where things usually need to be.
And so we're hovering, right now we're a $1.2 million law firm. Our goal is $2 million, right?
Yep.
So we're going to double down. Would it be 10 to 15% of the 1.2 where we are currently, or 10 to 15 for the BHAG, the big, hairy, audacious goal of
Yeah.
2 million?
No, I would say it's 10 to 15% of where you are now.
Where you are now. Okay.
Yep.
Got it. Okay.
Yep.
So that's 3, 4, and 5. Can you just outline them? Because we have
Yep.
high fact finders and our attorneys who.
So we've got total invoices
Yep.
and our average invoice value. And when you multiply those together, you get revenue. Then you have the 3, 4, and 5 are the 3 expense buckets: payroll, marketing, overhead.
Great. Thank you.
Of
All
course.
right. Next.
All right. Now, and let me kind of recap here too, right?
Yep.
I also kind of took the audience just now through the profit and loss statement, right? When you have your revenue and you subtract out those 3 expense buckets, you get down to net profits of the business. And that is going to be the bottom of your expense statement. Now, what's really important about net profits or your operating profit, that's the number that the business is going to pay taxes on. So if you report net profits of $200,000, you're paying taxes on $200K.
Got it. Okay.
All right. Now, the next 5 numbers deal with cash flow. Now, cash flow, obviously, like, that's a big buzzword in the marketplace, right? But like, the number of business owners that really dive into the nitty gritty and understand how cash flow works, like, how do I get from, my profits and what my profit and loss statement says of 200 grand, let's say, down to, well, my bank account only improved 20 grand, right? The nuts and bolts of all the numbers in between, the next 5 numbers are what I'm going to be going over.
Okay.
So the first one is your receivables that are outstanding. So these are the clients that you have billed and they have not paid yet, right? Now, some firms could probably operate and really have this as a 0, especially if you're doing like estate planning or something like that and you collect everything up front. Some firms, like if you're a family law firm and you're doing divorces, maybe you collect a $10,000 retainer, but on a specific case you billed 12 grand. Maybe that $2,000 is outstanding and still due, right? Any money that has not been paid, that has been billed and not paid to the firm yet, is due to the firm, right?
Okay.
So that receivable number, you don't have the cash in your pocket, right? And so that has to come out of your net profits, right? You might show a net profit of 200K, but if you haven't collected 2 grand from a divorce case, that 2 grand is not in your pocket. So that's the first number you have to adjust for. Anything you want to add there before I move forward?
Pretty clear.
Okay. Second number here, which would be like number 7, kind of in your list, would be any purchases of assets. So let's talk about what assets are. Assets are biggest probably use case for law firms would be either number 1, computers that you buy. Assets are basically items that are worth money and have a useful life of many years, right? You're not going to buy a computer and just use it for 1 year and buy a new one next year, right?
Yeah.
Technology improves and develops, but it doesn't develop that fast. Another big best use case would be like furniture and fixtures, especially if you're like renting out a new office space or bigger office space. You have to go out and buy desks and maybe couches for the lobby and things like that. Again, you're going to use that for more than 1 year. You're not going to buy a couch for the lobby and throw it out in 1 year, right? Or at least, hopefully not. Hopefully it's not wore out, right? So basically, what the IRS says is we didn't want to allow business owners to get down to the end of the year and see, okay, crap, I've got profits of 200K. I want to wipe that out and pay 0 in taxes. Let me just go out and buy $200,000 worth of furniture. The IRS said, nope, that's not going to fly. And so they you do get some tax benefits and you do get to expense some of it, but they make you expense it over the life of the asset itself. So if a couch is going to last you 10 years, they're going to let you expense it over a 10-year period. So you're not getting a 1-for-1.
Yeah.
But going out and buying that piece of furniture takes cash out of your pocket, right?
Yep.
So now the inverse would be true. Let's say maybe you have a printer. Maybe you've used it for 3 or 4 years. Maybe you just are deciding you want to go to a bigger size and upgrade, and you're going to sell your old printer. If you sell your old printer, that's going to add to cash in the bank, right? Purchasing one takes money out of your pocket. Selling one puts money in your pocket because you're collecting money for that old printer, right? So this is where it gets tricky, that the cash flow piece of it could work in both ways, depending on, are we buying or are we selling? And that's sometimes hard to grasp.
Good.
Yeah.
What's next?
So next, number 8 would be in the accounting world, they're called accounts payables. This is basically your bills, right? So if you've got like an annual bill that comes maybe for your malpractice insurance, maybe you get the bill on January 1st, maybe it's due in 45 days, like February 15th. So when you close the month in January, that bill could still be outstanding, right? It might not be paid yet. So that outstanding balance would basically be called a payable. It's your bills, right? Nobody loves bills, but that's the number that it is, right? So it's really the almost the inverse of the clients that owe you money, right? It's really the inverse of your receivables are your payables. What bills do we have to pay?
How's
But
it different than overhead? Because are you saying this is kind of like a one and done? It's not a line item within the P&L, which is standard cost of goods and services?
yeah, so your payables, like let's say you receive that malpractice bill on, the 1st of January, it's going to be logged in your overhead, but if you haven't paid it, it's going to be logged in your payables, meaning it's still outstanding, right? So our payables number really judges what bills have we received, but we haven't paid yet, right? Because if we haven't paid it yet, that also means there's more money in my pocket, right? Because if you're sitting on that malpractice bill, and I'm just going to throw out a number, let's just
Sure.
say it's 10 grand for the year for a firm. If you're sitting on that bill at the end of January, and let's just say you have 20 grand in your bank account, if you had paid that bill for 10 grand, you would only have 10 grand in your bank account, right? But you haven't actually paid the bill yet, so that's why you have 20 grand.
I think as you're saying this, I think a lot of times people don't look at it from this perspective because they're paying it on their Amex, which they're getting points and what have you. So it's almost like, well, I don't see the money leaving my account. I don't see so I love this different shift on it in regards to that, because even if you are paying on the Amex, we're counting for it right away.
Correct. And that would be, another thing that would be in payables as well, is that even if you've fronted something on your Amex, right? Like you still have to pay your credit card bill, right?
Yeah.
And
Oh,
so that is,
definitely that one.
yeah, I mean unless you want to accumulate interest and stuff, but that is also, in the payables section, right? Is if you spend all the month of January on your credit card, and let's say the bill's due February 15th, and let's just say it's 5 grand, that's a payable. That's still due, right? That $5,000, it hasn't been taken out of your pocket yet. It's not been taken out of the bank account, but it is still due. So
Okay.
that also falls in this category of payables, for sure.
Okay.
Yep.
Next.
Next is debt. So again, like assets, debt can be used both ways. Are we borrowing or are we paying it down, right? So a lot of use cases recently would be like idle loans and things like that a lot of law firms got during the pandemic. a lot of low rates, a lot of long terms, I see a lot of law firms that have that money sitting on the books. But in order to pay down that debt, paying down debt is not tax deductible. So that's why it does not come out of profits. So paying down debt takes cash out of your pocket that you cannot write down profits with. And so paying down debt is what I call a cash flow driver, but it makes a difference at the bank account level how much debt we're paying down. Or if you go out and get a brand new loan, let's say you get a loan of $100,000, that would add $100,000 to your bank account. So just like the assets, it can go both ways. But that is what also contributes to the differences between our profits and what we have at the bank level, what we have balance-wise.
I think that's such a beauty because so many people have a lot of shame when I talk to attorneys that they have debt, to use your example, the pandemic loan, what have you, and they don't look at it. They don't look at it from this perspective. And what I see, like you said, of having an advisor on the team, you're not there to shame, blame, weaponize them. You're there to educate and motivate them and create a path and plan for that, because if you're ignoring it and you're not paying attention to it or what have you, my experience with law firms and business owners, it's still got a hold on you. You're just not, it's causing anxiety. And the best definition I ever heard for anxiety is the definition of anxiety is no information. So we just swim in the vicious cycle. And the way to get out of anxiety is to get educated and informed, know your numbers, and then from there we could create a path and plan of what are we doing to get out.
Yep. And now that we've kind of covered that piece, I want to go through something here really quickly that a lot of business owners don't grasp and don't understand until they've experienced it. And that is, you can have a net profit in your business, you can pay taxes, and you can also lose money from paying down debt.
Say more.
Right? Yeah. So let's just say we start January 1 with $10,000 in our bank account. Let's say we add $20,000 in net income. So without these cash flow drivers, without any of these other factors working, we would think, okay, we had 10,000, we added 20. That means when I end the year, I should have 30,000. Okay. But out of the 20, again, for round easy numbers, let's just say the taxes are 5. I know they're not that much, but let's just say they're 5. That would cut it down to 25. And then let's say in debt, we had to pay like 20,000, right? In like principal on debt. So here we are. We started the year with 10, 20 in profits, which would technically take us to 30, pay 5 in taxes. That takes us down to 25. And if we have to pay 20 in debt, that brings us down to $5,000. So we started the year with 10, we ended with 5, and in the middle, you had a net operating profit in your business of, what did I say, 20,000?
Yeah.
Of $20,000. So you can have profits, pay taxes, and also end up with less money if you're servicing debt.
Wow, I love that.
Yeah. So it like you've got to understand how these numbers work together and kind of the order of them, and that's why I like going through them in this order. Like, I think there's a lot of business owners that I've met that think net profits is where it ends. When in reality, like, in order to get from net profits to what do we really see at the bank account, there's a lot of things in between there. And I think that's where, the question of, well, where did all my money go really comes from, right?
And there's another perspective where they're only looking at net profit. I've seen it this way too, where $10,000, $20,000, to use your example, comes in, and they'll take it all and pay it on debt, not knowing these other numbers that we just discussed. Because I think for people, they really need to know their head trash and their money mindset and their limiting beliefs around money. Because if you were brought up we don't carry debt. You know, the
Yeah.
IRS is going to come and your front door and haul you off to jail. Or, you know, I saw my parents just drowning in debt, and they filed bankruptcy, and it ruined our entire family when I was 12 years old. I think you need to really get clear with your money narrative. And what I like about this is debt's number 10. Is that the last one?
9.
9.
That is 9.
I love that you're reverse engineering this, because what I'm taking from this is you're training them how to think, act, walk, talk, and behave like a business owner. And then debt's number 9. What I see so often, I've had law firms that did this. You know, I had debt. We had a great month. I took it all and I paid off all of our debt, or a big chunk of it, or what have you. And now we're freaking out the following month because we didn't know those other numbers about
Yep.
invoices and how we get paid, when we get paid, and they're just looking at it like, oh, money in, money out.
And then they're struggling to make payroll and get bills paid in and get them in fast enough.
Yes, yeah, and then now I think we can talk about that one, but I love it because that's what I see. I see a lot of law firm owners. It's much better than it ever was, but they're constantly leading with the debt language.
Yeah.
They feel like their ultimate goal is to pay off debt. And so when they do that and drain the bank account, like you said,
Yep.
they can't get off that hamster wheel.
Yep. Yeah, and you know, a lot of times too, I talk through with business owners, like, you know, when we kind of go through like what debt do we have to service, I mean, we're definitely looking at interest rates, timelines, things like that. Like I have clients that have 6 figures in idle loans sitting on the books at like 3.2% for 30
Right.
years. And I'm like, let it sit.
Let
You
it
know?
sit. And how about you take that 10 grand you were going to put towards there and put it in marketing so you could
Yep.
generate more leads and more revenue. And so now you don't have 10 grand to throw at it. Maybe you have 70 grand. You know, I love
Yep.
that.
And payroll too, right? Hiring people. I mean, yeah, I mean, you know, like I said, I mean, I've got firms, they could throw a big chunk of money, you know, 40, 50, 60 grand towards the 6 figures plus. And it's like, no, let's talk through it. Let's really work through this. I mean, you know, even if you do that, it's not going to come off the books completely. It is a really, really, really low rate. There are other places that we can put that money that you're going to outpace that rate,
Yes.
right? Now, credit cards, I wouldn't necessarily say that, right? If we're talking like 25% interest, 28% interest credit cards, I wouldn't necessarily say that. But when we're talking about like 3, 4, 5, 6, 7, 8% loans, I can say that for sure.
Yeah.
Yeah. Last number here to kind of wrap this up, number 10 is owners' contributions or draws. So this is money that you either put into the business as an owner or take out outside of payroll. So if you're a business owner and you're paying yourself on salary, that's great. That gets classified in payroll expenses. Maybe it's $100,000, right? Then you can also take distributions above and beyond payroll as a business owner, and that could be, let's just say, 150,000. That 150,000 obviously comes directly out of the bank account. So number 10 is that owner number, right? Either contributing money to the business or withdrawing money out. But that will definitely make a change and impact to your bank account. And knowing that these 10 numbers that I've covered really drive how can we improve our profits and what are the things that we can do to improve our cash, which then in turn obviously helps you reinvest into the business and really helps businesses grow.
And a strategic byproduct of all of it, which hopefully this is everybody's goal when it comes time to sell your practice. It's
Yep.
going to be a hell of a lot quicker, faster, easier, and attractive if you have all this down, right?
For sure. For sure.
Well, Ryan, thank you so much. Tell our listeners the best way to get a hold of you if they want to learn more.
Absolutely. Yes. Best way to get a hold of me is netprofitcfo.com. right on my webpage, upper right-hand corner, I've got a link to my calendar. If you would like to book an initial meeting with me, I'm happy to answer questions, talk about your situation, see if we might be a right fit to work together. Just a short 20, 30-minute meeting. I also usually give a couple quick tips on those as well. So, you as an owner showing up, you're getting some benefit and hopefully putting some more profits in your pocket. That is by far the best way to connect with me, just netprofitcfo.com.
Okay, great. We will have that in the show notes along with Ryan's bio in there as well. And Ryan, thank you so much for drilling this down, making it incredibly simplistic. And I'm always a huge fan of having your team support you with knowing those numbers in your weekly stakeholders meeting, especially when it comes to outstanding invoices and things of that nature. You don't have to go it alone, attorneys. Enroll your team to support you without opening up your QuickBooks and showing behind the wizard's curtain.
That's right. Absolutely. Love conversations like this. I mean, I really believe, accountants and financial professionals, there's not enough of us that are going into this type of work. And, there's too many of them that are in the compliance side of the house, doing taxes, whatever. And I really believe that if we had more on the advisory side that kind of walk through these kind of things and work with business owners, I believe we would have less failed businesses in America today, especially, in the small business sector. So that's definitely what I'm passionate about and why I love helping small businesses.
Oh, it shows. And I love how simplistic, easy to digest and implement that you make it, because I think a lot of times people are throwing it in the finance world, throwing around all these terms, COGS and, whatever, EBITDA and what have you, and people's eyes glaze over. Just the same way that we train our attorneys of how to consult clients. Speak into someone's listening in a way that makes a difference for them without using all this witchcraft and voodoo language where they shut down.
For sure. Yeah, absolutely. I think, as I mentioned, I think at the beginning of this show, I'm a part of a CFO training organization, and we talk about that a lot is, really getting out of the accounting terminology, which to most business owners is, you might as well speak Chinese, right? To most business owners, they're not going to understand it. And so, yes, that is definitely, a skill set I've worked on for a while, is really making this understandable and getting away from accounting terms, and let's make it so that the business owner really understands in their terms what we're talking about.
Thank you for that.
Of course. Absolutely.
All right. We're going to have all the goodies, the links to Ryan's socials in addition to his website, a link to how to book a free complimentary discovery call with him. Know your numbers. Just start with these 10, hop on a call with Ryan, and let's get to a place where we are increasing not only your revenue, but your profit.
Absolutely. Thank you for having me on today.
Thanks for being here. All right, go forth. Team members, if you're listening to this, share this with your attorney and continue being a legal leader, leading a legal leader.
We've reached the end of yet another episode of the Hire and Empower with Molly McGrath podcast, where dream teams of entrepreneurs in an entrepreneur's world really do come true. Listen, whether you're a business owner, employee, executive, or hiring manager, we fully understand hiring, onboarding, and leadership is expensive, exhausting, often overwhelming, and absolutely time-consuming for the already tax professional. Well, we have your back on all fronts. For 25 years and counting, we have transformed over 4,000 law firm teams into the most efficient, resourceful, and profitable asset of your business. Check out our Smart Hire solution, our employee leadership program, and the 66-day law firm turnaround at hiringandempowering.com.